BlackRock. A name whispered in the halls of Wall Street, a behemoth in the financial world managing trillions of dollars in assets. This investment giant has set its sights on a new prize, the Panama Canal. BlackRock's interest in this critical waterway signals a strategic move with far-reaching implications. This is not just another investment, it's a power play with the potential to reshape global trade dynamics.
Please subscribe, like, and share Cosmo Academia.
Subscribe, like, and share Cosmo Academia. BlackRock's acquisition of the Panama Canal ports is no small feat. The $23 billion deal grants the firm control over the ports of Balboa and Cristobal. These ports, strategically located at either end of the canal, serve as critical gateways for global trade. The deal also encompasses a network of 43 ports spread across 23 countries, further expanding BlackRock's global reach. This acquisition positions the firm as a key player in the global logistics network. It's a bold move that underscores the firm's ambition and its appetite for strategic acquisitions. The Panama Canal is more than just a waterway. It's a marvel of engineering and a vital artery of global commerce. Serving as a lifeline of global trade, it connects the Atlantic and Pacific Oceans, drastically reducing the travel time for ships. This 51-mile channel acts as a shortcut for ships traveling between the Atlantic and Pacific Oceans, saving them from the perilous journey around the southern tip of South America. Without the canal, vessels would face a treacherous and lengthy voyage around Cape Horn, battling rough seas and unpredictable weather. Each year, thousands of ships carrying billions of tons of cargo traverse the canal, making it one of the busiest waterways in the world. The canal's impact on global trade is undeniable, facilitating the efficient movement of goods and significantly lowering shipping costs. For the United States, the canal is a strategic asset, enabling efficient access to both the Atlantic and Pacific Oceans, and playing a crucial role in national security and economic interests. Today, the canal is under the sovereign control of Panama, but its strategic importance remains. It continues to be a pivotal point in global maritime trade, symbolizing both human ingenuity and international cooperation. BlackRock's acquisition of the Panama Canal ports unfolds against a backdrop of heightened geopolitical tensions. The canal, a critical choke point in global trade, has become a focal point in this rivalry. China's growing economic might and its expanding global influence have raised concerns in Washington. The U.S. has expressed concerns about Chinese investment in the region, fearing undue influence over this vital waterway. Former President Trump's criticism and Secretary of State Marco Rubio's visit to Panama underscore the strategic importance Washington places on the canal. BlackRock's acquisition adds another layer of complexity to this geopolitical chess game.
The announcement of BlackRock's acquisition has triggered a flurry of official statements and reactions.
C.K. Hutchison, the previous owner of the ports, has maintained that the deal is purely commercial. They emphasize the financial benefits of the transaction.
BlackRock has issued a press release acknowledging the acquisition and emphasizing their commitment to a smooth transition.
The Panamanian government, which must approve the deal, has adopted a cautious stance. They have acknowledged the potential economic benefits, but stressed the need for a thorough review.
Meanwhile, the international community is watching closely, debating the growing influence of investment firms like BlackRock. Subscribe, like, and share Cosmo Academia. Section 6, Market Ripples and Economic Projections, Assessing the Impact.
BlackRock's Panama Canal acquisition has sent ripples through global markets. The immediate market reaction was mixed, with some investors applauding BlackRock's strategic vision.
BlackRock's share price experienced a slight dip following the announcement. However, some analysts believe that this dip is temporary and that the deal will ultimately generate significant returns.
In Panama, the deal has been met with a mixture of optimism and apprehension. The broader economic impact of the deal remains uncertain, with potential benefits and concerns about BlackRock's control.
Section 7, Navigating the Future, Challenges and Opportunities.
BlackRock's acquisition of the Panama Canal ports presents a complex tapestry of challenges and opportunities. This strategic move is not just about controlling a critical maritime route, but also about integrating advanced technologies and sustainable practices into port operations. the firm must navigate a volatile geopolitical landscape and manage stakeholder expectations. This includes addressing the concerns of international partners and local communities, ensuring that their interests are aligned with BlackRock's long-term vision.
One of the most immediate challenges is securing regulatory approval from the Panamanian government. This involves rigorous negotiations and compliance with local laws and regulations, which can be a time-consuming and complex process.
BlackRock must also address concerns about its commitment to Panama's economic development. This means engaging with local communities, investing in social programs, and ensuring that the benefits of the acquisition are felt across the region. The firm has pledged to invest in the modernization of the ports. This includes upgrading infrastructure, implementing cutting-edge technologies, and enhancing operational efficiencies to meet global standards, and create jobs for Panamanians. By doing so, BlackRock aims to foster economic growth and stability in the region, providing new opportunities for local businesses and workers.
On the geopolitical front, BlackRock must navigate the complexities of US-China relations. The Panama Canal is a strategic asset, and its control can influence global trade dynamics, making it essential for BlackRock to maintain a balanced approach in its dealings with both superpowers.
Despite these challenges, the acquisition presents significant opportunities for BlackRock. The firm can leverage its extensive experience in logistics, finance, and infrastructure development to transform the Panama Canal into a hub of innovation and efficiency. The firm can leverage its expertise in logistics and infrastructure to enhance the efficiency of the canal. This will not only improve the flow of global trade, but also position BlackRock as a leader in sustainable and technologically advanced port operations.
Subscribe, like, and share Cosmo Academia. Section 8. BlackRock's Gamble, Calculated Risk, or Strategic Masterstroke.
BlackRock's $23 billion bet on the Panama Canal is a bold move. Is this a calculated risk or a strategic masterstroke?
On the surface, the deal appears risky. BlackRock is entering a volatile geopolitical landscape, facing potential pushback from China and scrutiny from the United States.
However, BlackRock is not known for making rash decisions. The firm has a reputation for thorough analysis and strategic thinking.
The strategic logic behind the deal is clear. The Panama Canal is a choke point of global trade, and control over these ports gives BlackRock a significant advantage. Section 9. The Panama Canal in a New Era. Implications for global trade. The Panama Canal has long been a critical artery for global commerce, connecting the Atlantic and Pacific Oceans and facilitating the movement of goods across continents.
BlackRock's acquisition of the Panama Canal ports marks a new era for this vital waterway. This move could potentially reshape the dynamics of international trade, given BlackRock's significant influence in the global financial market.
One potential outcome is increased efficiency and lower shipping costs. With BlackRock's resources and expertise, the canal's operations could become more streamlined, reducing transit times and operational bottlenecks. BlackRock's expertise in logistics and infrastructure could lead to improvements in the operation of the canal. Enhanced infrastructure and advanced technology could further boost the canal's capacity and reliability.
However, there are also concerns about the potential for BlackRock to leverage its control over the canal for its own financial gain. Critics argue that such a powerful entity might prioritize profit over the broader interests of global trade.
The geopolitical implications of the deal are equally complex. The strategic importance of the Panama Canal means that any changes in its management could have far-reaching consequences for international relations, particularly between major powers like the United States and China. BlackRock's actions will be closely watched by Washington and Beijing. Both nations have vested interests in the canal's operations, and any shifts in control could influence their economic and political strategies.
The Panama Canal has played a pivotal role in shaping global trade for over a century. Its strategic location and operational efficiency have made it a cornerstone of international shipping routes, and the world awaits the next chapter in its story. As we look to the future, the developments at the Panama Canal will undoubtedly continue to influence the global trade landscape. Subscribe, like, and share Cosmo Academia.